Well, the main thing is getting the engineering done, get the net zero one plan pinned down. We are using the ethanol to jet route up there. That takes a lot of risk out of it from a financier's point of view. The marketplace has gone all in on we want SAF. And so, okay, well, that lends itself to a lot of growth. We've obviously signed up a lot of contracts. That surprises me, actually, that we've signed up as many as we have this fast. And now we're at 200 million gallons of take-or-pay contracts. We have Axens has been a hugely pleasant surprise in that they've been doing these technologies in the petrochemical industry for, decades, literally decades. But they didn't know you could decarbonize ethanol. So and decarbonizing ethanol is a hard thing, but we learned how to do that as we were working on isobutanol. And so it works out to be pretty much of a marriage. That's a beautiful marriage of what they're doing. And, they've done like 100 of these plants. So it's very de-risked. And this is fundamentally important in terms of perceptions, and we're out to raise money. That means we expect cheaper money. And that's more important than ever, given the macro environment, where people's risk tolerances have gone down. We're a company who's interested in using carbohydrates into hydrocarbons. That's been clear ever since I've been here. We've been working on ethanol for over a decade ourselves with our own technologies, and we have some very good technology, and it maps into what Axens has been doing and ties together nicely. We've been working on decarbonization for fermentation plants and using agricultural raw materials, and how do you set up the system and how do you count carbon? That's kind of the umbrella technologies that we work at, and that's what a lot of our patents are about. And we are one of the patent leaders, even in alcohol-to-jet technology, in addition to isobutanol to jet. So from us, we are more about getting stuff delivered in the marketplace that works well. One of the shifts that occurred is that the interest in SAF is heated up. People know they have to do something. We're able to get take-or-pay contracts that can sponsor investment from debt, from lenders. So having a take-or-pay contract, remember, that means that someone's putting a balance sheet or a letter of credit that if we make it, they're buying it. That's huge, absolutely huge. And I think we're still the only ones taking that approach around here. People casually say, oh yeah, we'll just sell the stuff. It will make it. Yeah, really? Who's going to finance that with that risk, really, given all the strange environment we're in? So we like having the take-or-pay contracts. It's a good thing. Isobutanol is a new fermentation. If we scale it up to a giant scale, that we are already engineering it conservatively. So we're looking at it and going, shoot, in this rising environment, that could cost more. We're going to have to pay risk premiums. And you know what? The world wants more SAF. Isobutanol makes great gasoline. It makes great chemicals, great rubber. It makes great SAF as well. But you know what? All in, the ethanol route is less riskier to go large scale immediately. We're talking really large scale. We are not done. We are not done with isobutanol at all. We have partners like Chevron who want to do isobutanol. We have other ones who want to do isobutanol and all the rest. We just got to figure out what that program looks like and get it pinned down.
And not to get sidetracked, but you could probably make renewable drop-in gasoline as competitive with petroleum-based gasoline, given the prices right now.
For sure. We could. And not only that, when you look at the macro markets of what's happening when you bought EV and the ability to decarbonize electricity, people are starting to wake up. People are waking up and going, well, it isn't like we can just flip a switch and voila, the whole world has green electricity. Oh, and EVs are everywhere. That's going to take time. And so, the market for gasoline dwarfs the market for jet fuel. With the jet fuel market's easier to understand by far, and we can get take-or-pay contracts with definite confirmed demand. Right. Whereas you're always in this controversy around gasoline. There's always a controversy of, well, it's going to be EV or it'll be this or it'll be that. It's like, so the dust will settle. In the end, I think we'll see people wanting to pursue the isobutanol as well. But I say we're going to stay focused on driving for net zero one. I want the damn cash flows. So we got to get on with that and get it built.
And I think it's something that people sometimes forget, as SAF is obviously such a huge market and big focus now, but the technology itself suits to many other applications and chemistries as well, correct?
Well, they do. So what happens is that, remember that the chemistry to convert ethanol into SAF overlaps the exact chemistry of isobutanol into SAF. So we already have years of experience at part of this, even from ethanol. There's a couple new steps you have to put in. So it's really one of these things where new steps to us, the industry does it, Axens does it, and other in the petrochemical industry. But it is one of these things where these technologies are highly related. It's not one or the other. So when people say it's a pivot, I always go BS. It's not a pivot. We're out to do freaking low cost hydrocarbons and deliver high quality product as fast as possible. That's what we're out to do. And we see that, when you're taking and making these things, it's a building block approach. We're using what's called olefins. These are the things that come out of crackers from the petrochemical industry. We just happen to know how to make those building blocks, the ethylene, butylene, propylene. We know how to make those from a biobase at carbon negative values, negative carbon scores. That's useful and interesting. That means we have the ability to supply anybody who wants a material. We can do that. We can supply the building blocks materials, but they in and of themselves don't drive scale. Fuels drive scale. That's why we focus on fuels. Axens has been one of these leading licensing and technology companies in the refining and petrochemical world for decades. Everybody in that world knows them well and trusts them. So where that shows up then is how it plays into the people with that experience of energy and petrochemical energy companies and refining and chemicals, because they're super well known. Axens is not a public facing company. So everyone's, who are they? What do they do? And they're really kind of quiet and low key. And they're a bunch of engineers and technology people, process design people. They're very, very good. So we've been working with them and getting their story out, but telling them they have a lot to brag about. So we're working with them. So they go brag more. It makes my life easier. And they're very good guys. And we're kind of kindred spirits in what needs to occur. They believe in, how to decarbonize the whole system, and they want to play.
Several questions on Chevron.
Yeah, we kicked the can another quarter, and that's because Chevron is interested in doing the isobutanol and octane and gasoline and a variety of things, just like they have. And so we're trying to figure out how best to do it with them, and that'll take another quarter. It could kick the can longer, but there's a lot of interest in isobutanol into hydrocarbons. We just got to sit down and see who wants to help with that, make it happen. So we love the isobutanol route because it makes butylene. Butylene goes into rubber. It can make into plastics. It can be made into, of course, really beautiful octane gasoline. And we're starting to see more interest in the gasoline from more than just Chevron. We're starting to see it from other customers too, because they recognize you can't get their CI score reduction requirements by 2030 and 2035 just on EV. They're recognizing it. We're starting to see that recognition occur. I got to tell you, when I was in, I testified at the House Ag Committee a few weeks ago, and first time ever I heard Dems and Republicans talking about how this EV thing is, I should be careful. It's like too over the top. It's like too much hyperbole of what can be done. When on the one hand you're talking about, rolling blackouts, and on the other hand you're talking about, electrify the world all at once. So it doesn't happen instantaneously. I forgot to mention, for the first half of the year, it's important as our RNG project is coming on stream. That's going to be putting gas to the pipeline pretty soon, and it's starting up pretty well. We have little things to deal with like startups do, but it's gone well. And everybody should remember, we did that project ourselves. We were the general contractors. We built it, and we subbed out the contract. It came in on time, on budget. And this is in this world where everyone's all worried about inflation, and we still managed to get her done, and that's
cash flow.
Cash flow. And next year should result in 16 to 25 million of cash flow of EBITTA from that project back to us, and on pre-sold stuff. So good. We'll finally be on the scoreboard in terms of having revenue and EBITTA, at least from that business. And then for the next year, it's all about we're very focused on driving through to get NZ1. Engineering numbers for the ethanol plant look good so far. We're working with Fluid Quip. That's something now we're talking publicly about, where people speculated about it before, but that helps to explain why we think about the fractionation the way we do, and how you upfront fractionation of corn, separate the protein and oil, get the carbohydrates. They've done some nice plant designs recently, and so their numbers are accurate. So we feel pretty good about where that one came in. It was right in line with what we expected. We're still doing engineering work with Axens. We're doing a modular design this is important, a concept. We got to build multiple plants at once. Okay, the way to do that is you do modular plants. They get built in a factory. This takes a lot of risk off the table for trying to expand, because then we can do quality control on the plants. We're doing it. Remember what I said, these plants are known from Axens in the petrochemical industry, the unit operations, equipment designs, the catalysts, these are known. It's about we're packaging them up in different ways. So we're sizing it for 100 million gallons of ethanol feed. It'll make a little over 50 million gallons of SAF, and then about 10, 11 million gallons of naphtha and diesel. But these are going to, the idea is to build them at a factory, and it works, and then ship modules to the site to build them. And that's I think going to be really important for how we grow faster, and it simplifies our life. By the way, we got the conditional use permits and all that kind of stuff with no hassle. That's good for the wind turbine and the Net Zero 1 plant. We're going to finalize the land purchase agreement. So we said we're going to do that. We got to go do it. Then we got to finish the commercial agreements around hydrogen and wind, and how we're going to handle any other additional energy sources like biogas there. And then we got one of the really important ones, who's going to be the EPC, and we're doing a bidding process for it. You know, there's several competitors who want the business. That's good for us. And we can do that because we're working with known technologies, completely known technologies. It's a little bit easier. And then we expect to do some groundbreaking this year is what we want to do. And that's what we're going to be trying to do. The closing of financing, the completed financing would be next year. And we'd bring in a project financier with us, an equity investor in the projects. And that ought to help everyone understand more of the business model that we have, which is a developer isn't just pure equity that we're putting all the equity we have into these projects. We got multiple projects to do. We will be equity investors, but we're also developers and marketers and technology providers and carbon counting services, which is a big deal in and of itself. How do you account for carbon? KLM got sued. I just saw the article just today for false claims around fuels in Europe. And so this point, we're all over this with our Verity tracking. We're building our team up. And we formed a joint venture with Block Size Capital. So we got a lot to do, but the main thing for us and what we care about is getting Net Zero 1 delivered. That's on all of our mind all the time. And we're in pretty good shape. There's lots of money, lots of people interested in equity financing and debt financing for that plant. So isobutanol works, but we are conservative. And then, the engineering firm puts conservative numbers in there. There's examples I could tell you of stuff that we saw, which are like, what the hell? So you got to go back. They call that value engineering. And so I could delay the project and, 6-8 months. And, then at the same time, we were looking at Axens, and we got to know them really well because they're doing the engineering for the isobutanol to jet and octane. So to get to the isobutanol, they're doing that engineering for us for isobutanol route. Remember what I said? It's the same kind of technology on the ethanol route. And as they saw what we were doing, we got to know each other really well, and we kind of got to be buddies with them. And they go, well, holy cow, you really can decarbonize ethanol. Here's how you do it. And here's how you got to think about the whole big business system and integrate energy. And this is a non-trivial exercise. People casually talk about, oh, hell yeah, we're just going to take any old ethanol plant and turn it into making jet fuel. I don't think so. Ethanol plants typically are a 75 CI score. It takes like 20 to 25 CI points of energy if you're using fossil-based gas and grid electricity to convert ethanol into jet fuel. So you're up to about 100, which is actually quite amazing when you stop and think about it, that you can get to the same place of energy that you would get from a petrojet. Well, we're talking about net zero here, erasing that 100. By using renewable energy properly. And that's part of that is the integration of how you do it. There's a whole ton of know-how here. And we're asking questions and solving things that people just hadn't thought about, like advantages, because we have a very CI-driven point of view.
I think maybe a lot of investors forgot about that California market opportunity, right? And when you were looking at that, you guys spent a tremendous amount of time thinking about decarbonizing ethanol in order to sell into the California market, right?
That's
so
what we did.
Homework has been done a while ago.
Yeah, that's this point. That's what I point about. I always take exception when people, oh, you're all isobutanol all day long. No, we weren't. Watch our patent filings. Go look them up. And so, we have a bunch of stuff here that's pretty darn interesting. And, It's about technologies are great, love them. We're creative. That's not what makes money. What makes money is selling a product in the marketplace. That makes money. And so that's all about getting capacity built and get it deployed and do it quickly and scale to a bigger business. 200 million gallons. Think about that, Sean. 200 million gallons of take or pay contracts. That's like 4 net zero plants. Thank God that we can do leveraging off of existing plants, and we've got candidates that we can decarbonize, you know? And so it's just a question of how we do them and when we do them. It's going to work, but it is not, it's insufficient to just have an ethanol plant. You got to be able to decarbonize that ethanol plant.
Does this change the economics or the way you do offtake agreements or anything else like that and out of NZ1 and beyond?
No. So the way that our contracts work is that we're indexed to jet in the first place, Petrojet, right? And then we get paid a premium on top of that. Call that a tolling fee, for example, a fixed fee on top of that for manufacturing the product. And then we would have the green values, the RINs, the California LCFS, and then a blender's tax credit of $1. And so you add that all up, and it makes for a pretty darn good margin. And so the price goes up, and it disproportionately rises compared to the corn. And so what happens is that the corn, remember, it's gone up in price, and corn and oil generally are co-correlated, above 75. And I'd say that correlation holds between $75 to about, where we're at now at 110. And then you can see oil rise up and corn kind of plateaus. And then remember, in our business system, when you're fractionating corn, you're separating out the protein and the oil. Those products also correlate with corn. Oil a little bit different now because there's demand for it for making renewable diesel. So what happens is that it's kind of a built-in hedge on the corn side, and we're indexed to the rising price of oil. You know what that means? Our margins hold, even in today's environment, which is pretty darn interesting. So I think that's today, the snapshot of today. It's very competitive. It makes sense. But when you're doing a project, you're looking at it over 20 and 30 years and having to make the arguments of, here's what, supply and demand of corn will be over that period of time, and what oil might do. And, so what you do is you get a bunch of independent experts that are acceptable to lenders and equity providers and have them do the reports, and then they bring them in for the diligence. That's what we do. That's what takes time. But that's what we're in the midst of, all that kind of stuff. It's looking good. It's a bottom line, short version, simple version. We feel pretty damn good, and I'm really glad we're doing what we're doing on carbohydrate basis, because carbohydrates are available the whole world over, and this technology translates. So we like it. Okay, so let me just talk about things from questions that people ask me. Why don't you just license technology? You know what? This market's not created yet. People who try to license stuff before it's time, they get crushed. You can't make very much money, and standard licenses are only a few percent of the capital cost, like maybe 5%. So you can't make tons of money that way. Yeah, the margins are super high, but you can't make tons of money. And of course, you get rewarded at Gevo by cash flow potential, right? So, okay, you want something more than that. A developer, if you're just pure developer company, then you would get an equity interest in the plant that gets built. Someone else's money puts up the equity, and it'd have debt layered on top of it. That's a straight up project finance, typical developer approach. We're a little bit different in that we're also working with technology. We have some of those to apply. We have a technology package that go with it, but we're developers, right? But we also want access to the cash flow stream, so that requires equity investment on our part. What we'll do is dial back the amount of equity that we put into one of these projects and up bringing in, equity from somebody else, because there's tons of money out in the marketplace who are interested in projects. They don't want the volatility risk of corporate investment at the Gevo level. They like the private company project level investment that generates cash. That's good. And we'd set it up as a subsidiary company, an LLC, cash, so the numbers roll up to us, and but it's putting their money to work. We'd still have controlling interest, even though we might have a minority equity position. That's the subtlety here. That's what's been done in a lot of the big energy projects or renewable natural gas or whatever it is. That's a common thing. People are used to that idea. So that's what we would do. And then start thinking about taking that little cut and paste to the next one.
Maybe boil that down and what that means for the common equity shareholder. Most of we deal with equity investors and on the audience here. So from that investor out there who owns Gevo stock, how does this flow down to them to create value for the, for the corporate Gevo?
Well, there's two ways. One is it reduces the amount of money we would need to raise up at Gevo Topco to do all the equity investments. Don't have to raise that money up there because it's down below in private companies. And then we would see the cash flow streams come up to Gevo Inc. And that's, so you'd see a Gevo Inc. level, and you show that as, the equity and growth. I mean, okay, the world's not rewarding growth companies right at this moment in time, but it'll be back again. Think about the potential. The EBITDA from a net zero one plant is $200 million a year. EBITDA from a $70 million project RNG is, $16 to $25 million. Which one makes more money? And so we're in the quest of making money. The net zero ones plants have multiples of those. I like that one heck of a lot. Now, remember, RNG for us is a strategy to make sure that we have options to get rid of fossil-based natural gas out of our production assets. So we will probably take RNG from our plant up to our net zero one site. We might do that because that might be the best deal of monetizing that carbon value as compared to selling it to California, especially at these lower, as the world changes in California, and who knows what will happen over there, carbon value. So we do think we will add more RNG, but it's not a main thrust and focus. We can grow faster. We have better potential on net zero one, jet fuel, and other hydrocarbons. So for us, the biggest critical issue, and when you're working on ethanol plants, and it's true of an isobutanol plant too, is how do you decarbonize those big agri-processing facilities? That's a big deal question. Of course, you have the related one. You got to still decarbonize the alcohol to jet part of it too, or alcohol to hydrocarbons part. So always on our mind is every time we touch something, first question is how the heck do we drive down that CI score? How do we, where are we going to get the renewable energy, and how do we do that? And so RNG is going to be part of a long-term game for us from that reason, I think.
And what are the risks that, in your mind, is something that has to keep you up at night that you worry about? What would those things be that we need to watch out for?
From a straight up technology standpoint, this one is about as pinned down as you can possibly have without having put all the pieces together, because they all the pieces work at large scale already. They're known to work. How we're optimizing the energy, okay, well, that's some newness to it, but it's pretty minor. So we're unusual in that we don't have technical risks like people would normally consider when doing something like this. My risks are all about macro market stuff, or it's the environment itself, or not the environment, but the carbon. Carbon values, I expect them to stay up. Will oil prices stay where they are? I don't know where oil prices are going to go. And they aren't going to go down. I don't see them going down to $40 anytime soon, but over a 20 or 30 year period, they're going to change, so it's more stuff like that. We're continuing to work with them, and we've got, they got those big plants, those big dry mills that are pretty interesting. They're two of the world's biggest plants, and they announced building the pipelines, but that's a key piece of data as to they got to see those pipelines get built so they can be decarbonized. The size of those plants would be 300 million gallons of ethanol input to make, like 150 million gallons of SAF. And so those are interesting plants. We expect that they would provide good economics. And so there's a question of when will those things be practical, come online, and what time frame on the pipeline, such when they'll get built. But it's a good project. And so ADM loves the idea of SAF, near as I can tell. They're engaged, and we got to figure it out. We're going to have to go design a 300 million gallon plant, spend some money on it, though. That's what I think. And we'll do that later this year, probably. In the grand world of corn, about 1% of corn production is used for food use. So the kind that's in a can or in a bag, on a cob, that you eat at dinner, that's the 1%. That's not even the kind of corn that we use for making our products. So it's not the corn that you're familiar with. It's not the kind that's in a tortilla. They use white corn for most of those. Sometimes it can be a yellow corn, but it's mostly not that. And so it's less than 1% of worldwide is directly used for food. Now, when it comes to using corn for animals, there you have it that the protein is the stuff, and the protein in the oil too. But the protein and the oil in particular are the thing that gives the nutrition and some energy. protein is the most important thing. So when everyone wants to talk to me about food versus fuel, let's have it, bring it. We capture 100% of nutritional value. How do you get nutritional value? That's about protein. We capture it, we'd send it to the food chain. And you know what? It's got the carbohydrates stripped out of it. Guess what the carbohydrates? People complain about cows and their burping and their methane production. You know what? Maybe we should stop feeding them so many simple sugars. It's not good for their stomachs. That's why they burp and make methane. This is like facts, man. And so it makes my skin crawl when we see these broad brush statements like this with people out looking at the facts. We can make better feed products in a plant like ours and deliver them and get better growth in animals with less pollution along the way if you're making these products deliberately instead of these broad brush statements. On the other hand, carbohydrates, look at us, Sean. You know, how many people in America are fat? You know, it's like, what, we need more high fructose corn syrup? We need more sugar, more free sugars in our diet? Y'all want that? So really, is that what we want, people? Come on, give me a break. Start looking at it holistically. And none of that. You want to start talking to me about counting carbons across of what works? My gosh, I'll take anyone on that one too.
Government, whether we're talking about subsidies, mandates, and a couple of questions like, why aren't they doing more? Why aren't they pushing this more? And I don't know, you're obviously participating in some government committees and sort of testifying in front of them. But what is it going to take to get that to move forward aggressively?
I don't even know how to respond to that question, given our government and the way they're operating currently, which is like mind-boggling. So I think that they'll get something done on bills that help climate change. And I can see political reasons for people on both sides wanting to get something done a little bit, but it's still, I don't know how active they'll be, but the amount of dysfunction in DC is profound. That said, I don't care very much. There's nothing that's there that hurts us. So could it help us? Sure. If they turn up with this massive bill that's going to fund all things, sure, great. Love it. We'll be in there. And we are, by the way, applying for DOE stuff as we can too. So we'll see. So all good. The real demand is coming from fundamental stuff from the marketplace. This is a fundamental point that everyone should not be lost on anyone. This push for companies to be accountable for the greenhouse gas emissions and their ESG reports is a big deal. They have to do the reporting of it. And the SEC is going to hold people accountable. That's what they've said. And then it has to be accurate accounting besides. And so it can't be fluff and BS. It's got to be real stuff. They need real things. That's the fundamental change, along with shareholders themselves and companies saying, hey, look, you've made a lot of money polluting the earth. It's paraphrasing, okay, so forgive me. But, you made a lot of money polluting the earth. You should change to something that's green. And so we're starting to see a very different attitude across companies in the whole energy space. They call it energy transition. People recognize that there's got to be a change. What people want is a rational change, not some arbitrary BS change. And, a few years ago, we could not get these take-or-pay contracts. Now we do. That's not driven by government policy. That's driven by market demand and what people think they're going to be held accountable for in the future. That's an important point, is that we can play a different game now, and we can lay the data on the table and prove things. That's a big deal. Plus the technologies work. So we're in a ripe time, and there's lots of investors who want to invest in projects. And so I think it's an exciting time for us. And I sure like the ability to cookie cut and grow. That's good. Makes me feel better. That helps me sleep at night. So I thank everybody for participating, hearing this, and for your investment too.